Welcome to the August 13th, 2018 Advance Report from McGowanGroup clients and NetWorthRadio.com listeners. I'm Spencer McGowan, President McGowanGroup, your financial weatherman for a quick-paced tour of the global financial markets, including strategy discussions you just won't get anywhere else. About a 5-minute video designed to make you financially smarter, more astute, and to help you make good investment decisions. We're going to start today with the long-term chart in the Dow Jones Industrial Average. That was the winter storm, and it may put the Dow range-bound for an extended period. The lesson from 1965 through 1981 is the Dow topped 1,000 and did not make a new high for 16 years, a very long slog for equity investors. This weekend's program at NetWorthRadio.com is going to cover some solutions for a potentially range-bound market where equity prices overall may not appreciate for an extended period. We're also going to move into fixed income strategy this week. Let's take a look at one of the most popular fixed income allocations. Here, what you see is the Vanguard Total Bond Market. This represents one of the most popular allocations in traditional advisor portfolios. But what have the real results been? We talked about an extended period without returns on the Dow. Look at this in bonds. This has a yield of approximately 3%. But notice we go back to mid-2016. Even if you reinvest those interest payments, you are still below a negative total return, below where you were in mid-2016. Now that we're past the midpoint of 2018, investors may get frustrated with a less than zero return in traditional fixed income. The solutions are going to be covered at networthradio.com with charts and graphs beyond what we're covering here. We'll actually go deep into fixed income strategy and where we believe investors should be for the next 10 years if this is going to be an extended period of a flat to negative return in traditional fixed income. We heard Apple topped $1 trillion in market cap, and the first time that a company hit $250 billion, it was Cisco Systems back in 1999. Now, Cisco continued to make progress. They make routers. Company's done just great. Well, look what happened to the equity price. We are still below the $80 high. 44 this week. That's an extended period without a return. It mirrors what happened to TI and a lot of the tech companies after that run-up, Dell Computer included, which is now private. So Apple's had this tremendous run-up. $1 trillion is a lot of money. It takes a lot of money to actually push something like that higher. So PetroChina was actually the first company to top $1 trillion market cap back in the Chinese stock boom surrounding double-digit growth. They topped $1 trillion in total value here, and today we stand significantly below $200 billion in market cap, more than an 80% loss for PetroChina. Moving to the oil markets, oil this week settled back to 66 at the low point, 67 near the end. The pipeline index is the colorful chart. The burnt orange chart, appropriately enough, is oil. Well, what's the difference here? From this low point, the percentage appreciation says the pipeline index, which has started to run recently, 293, an amazing rally from 260 at the beginning of July. This, if it catches up to oil prices, would be a near 100% return, potentially over 5 years, but not without price risk, as you can see here, from $100 barrel oil to 27. These two are correlated, and pipelines appear to be catching up. There's a problem in the Permian Basin. The pipelines are full. Well, hopefully they'll raise their prices if you own some. But notice Cushing is the other oil hub besides Midland crude. These two indexes, 67 versus 53, a $14 discount if you're producing oil in the Permian Basin. It means the pipes are full. Liquid natural gas exportation is going to fill the natural gas pipelines, likely over the next few years. So what happens here? Well, This also means that there are likely to be pipeline expansions from the Permian to the Gulf Coast in that infrastructure. Now here we go with the Turkish lira. This is the dollar value versus lira. So if you're going to Turkey, this is great news for you if you like going to Turkey. So the spike here is Erdogan, the leader of Turkey, saying sell dollars, and of course he was hoping that buy lira. Down 10% Thursday night after Erdogan issued his mandate that citizens sell US dollars. In fact, the whole world bought dollars and the lira plummeted over 10% at the low points. I'm Spencer McGowan, your financial weatherman. A pleasure to be with you each and every week. Be sure to tell your friends, share the video because it is probably the best 5-minute education in finance and investment strategy. We'll be back next week with the best in financial news. Thank you for tuning in. My firm, McGowanGroup Asset Management, sponsors NetWorthRadio.com and of course our YouTube channel under McGowan Group. Some educational disclosures and discussions that I wanted to add to the broadcast. The first is, I'm very proud of our team, including Stephen Norris, who will be added as soon as we redo the picture. He's our newest team member. Come down, meet the team that cares, get a written plan, because the securities we discuss, the financial news we discuss, that's not a recommendation until you actually come down and get a customized plan at the Crescent. You'll get a tour, and we look forward to seeing you. We're going to cover value at risk of loss in portfolios, and you can see it right here. Learn about our performance, what happened in 2008, how long did it take to recover. All of those items are posted right here at NetWorthRadio.com or the McGowanGroup.com. The other part of the program, when we look at price fluctuations and bear markets and risk control, that's a huge part of NetWorthRadio.com. We look forward to helping you advance your plan and your cash flow. Come down and meet the team that cares.